We are back at it again here with another video with the Invest for Tomorrow. To all the first time viewers and investors, welcome to the channel. To all subscribers, welcome back. All I ask for returns for to smash that like button to let me know you watch this video. Helps out the YouTube channel and lets me know you appreciate the time and effort I put into making these videos. So here we are with the SPY because it lets us see the pre-market and after hours action. We're also going to look at the S&P 500 index from a broader perspective, but the SPY lets us see zoomed in what's going on. And today our SPY bot, the latest release, which we added over to the Discord, which sends us notifications directly to the Discord messages, sent us a bear indicator at 12 p.m. and put options nearly went 2 to 3x within an hour, guys. If you guys want to get on early with us, whether it's the SPY bot or the opportunities we look for every single day, check out the link down below in the description to the Discord or 42 Vision Indicator to receive the clarity you deserve within the volatility of the market. So the SPY has had a big pullback since yesterday. A lot of it has to do with Facebook. I mean, you could just see the effect Facebook had on the market. Now, why is it jumping up like it did now? That's what we're going to cover in today's video. But before we do, I want to share with you guys the opportunities I mentioned this morning over at the Discord. And once again, if you guys want to get on early with us, every single morning we strive for opportunities like these. Check out the link down below in the description to the Discord. We look forward to having you join us, and we're going to jump right into it here with the SPY and also S&P 500 index overall. So the opportunities I mentioned this morning turned out to give realistic expectations, and if you guys want to get on early with us every single morning, we strive for opportunities like these. Check out the link down below in the description to the Discord, and by joining, you'll become part of a growing community of investors all looking to learn and grow together. So this is the stock I mentioned this morning, BCDA, and it was sitting sideways and pulling down towards the bell, right? Sitting sideways, pulling down towards the bell. It finally got a bull indicator and it ran 5 to 10% after the bell, and then it pulled back down, got another bull indicator, and took off to a highest point of 15% plus from the moment I mentioned it to its dip and the rip, guys. And if you want to get on early with us, you're more than welcome to. Check out the link down below in the description to the Discord. We strive for opportunities like these every single day. A regular day is 5 to 10%, a great day is 10 to 20%, and a home run is 20% plus, guys. We look forward to having you join us. Check out the link down below in the description to the Discord, and we're going to jump right into it here with these charts. So here we are with the SPY, the S&P 500 index, and it's actually pulling back. Today was a day where if it broke through this support here of 445, that was going to be a key level. You can see it right there, right here, 445. If it broke through it, it was going to go lower, probably test 439 and go lower into the 420s or low 30s, right? So super important that this bounce back. The only question is how strong or real is this bounce back? Why did it happen? What's going on? And why did it fall so fast from yesterday to today? Well, yesterday was because of Facebook. Today, this bounce back was because of Amazon. Okay, let's go ahead and look up here. Amazon, you will see that this stock roared in the after hours. I mean, that's huge, guys. I mean, this stock went from 2,700 all the way to 3,300, rejected, and it's still in the 3,100 range. This is pretty big, okay? If this continues with strength into tomorrow, it can probably pull most of the stock market up with it. It's important to remember, though, that it's not guaranteed, and there are some things that came up on the earnings that isn't as exciting as these candles make it look, but money seems to be flowing into it, and it may continue into tomorrow, and especially based off 42 Vision, it was an extreme weakness and it went into extreme strength. But this was the main thing. Revenue was missed, not by a lot, but being missed is still impactful, right? By $270.8 million, which is less than a whole entire percent. It's literally 0.20%, but still something to be aware of, something to watch. And earnings had one good thing, and it was the guidance. That even though there's shortages or different hurdles with obviously supply chain issues, that the CEO is optimistic about the growth in the future and some of its innovative plans. And then on top of that, they're going to be raising prices. So they're going to try to balance out through inflation. So that's a big deal moving forward in that forward guidance, having some type of positivity. But we need to see what does that really mean for the S&P 500 index. We're going to pull up Ultimate 42 Vision and we're going to break it down big time, because throughout the day things were pretty negative, especially headlines. And this reversal, we need to know how strong is it going to be. So we're looking at it right now with the 30-minute. I'm going to pull up the bull and bear indicators, which you can now gain access to as well. The link is down below in the description to the 42 Vision indicators to receive the clarity you deserve within the volatility of the markets to maximize on opportunities no matter which direction stocks are going. So yesterday in the aftermarket hours, Facebook earnings destroyed the whole entire market. It led into today, and it had a bear indicator on the 30-minute since 456, and then things pulled downwards. We hit lows here of 445 and we bounced back up, and we're actually under a bull indicator right now. Now, this was the headlines from yesterday into today, stating how Meta's drop actually created the deep sell-off that technology sector was being dragged with, and also how Friday, which is tomorrow, the NFP report will be a big attention that every single investor is going to be focusing on. So this could crush, okay? The NFP report, I talked about it in yesterday's video, and I'm going to pull up that diagram again, and we're going to look at the updated information from today, and how I stated yesterday that the NFP report was going to be pivotal at the end of this week. And that's not the only thing, which is the non-farmers payroll. But this whole entire article was just talking about how Facebook made things plunge, right? But then we have Amazon looking like the hero, saving the day. But when you zoom out and you put the 4-hour, yes, we've been under a bull indicator here since way up here at 439, and we went all the way to 457. But we're pulling back right now, and this is still red. Even though we're coming back up, it's not strong enough. So could it be a fake out? Could it be one of those mornings where things are running up and all of a sudden start to pull down? Or things early on in the morning are going to pull back pretty fast, and it's going to be because of the underlying reasons that I've talked about in my previous videos that no one's talking about, and beyond Meta and beyond Amazon's reportings and so forth, there's something bigger that's pulling it back from these highs. Now, in this whole entire situation, we've had this in a very subtle way, which is the 10-year treasury going upwards for the last several days. Okay, we spiked up, we came down, and we're spiking up again. That hurts tech. That pulls back the markets, especially when it moves really fast and when it has a continuation of an upward trend. Right now, it's been kind of sideways. If it breaks out of this consolidation, we are going to see a very rapid change in the markets. So that's why a lot of people could be getting blinded on what's going on here. Now, if I pull up the 1 day, it's been strong as well. We got that bull indicator, but things quickly shifted back. Amazon is really going to distort the focus of what's really going on. But if that NFP report goes ahead and cancels out what Amazon just said, everything Amazon said, yeah, it brought up the markets today in the after hours, and it may have some effect tomorrow, but going into the end of tomorrow's day or even next week, we could be affected big time by these reports. And I'm going to pull up everything here, which is what I talked about yesterday, and it's so important to realize these information. So the 1 day I stated, yes, it got a bull indicator, but we need to see it go into strength, shift from red with green borders to green. It's not doing that. Even though there's been a lot of volatility, it's pulling downwards. That's the one thing. The second thing is the 1 week, guys. We're under a bear indicator. Yes, this right here has brought itself back up. It's looking slightly green. I mean, it's a really, really thin line here of green with red, but that bear indicator doesn't pop up every day. The last time we got one was in 2020 crash and the 2018 correction/crash because rates were going to go higher. And then the market finally got a bull indicator a few months later after that dip. And same thing here. We've been under a bull indicator on the weekly chart since June and April of last year, and things have pulled up really strong, and now we're under a bear indicator on the 1 week. So this could be a fake out, right? And things could start to shift back up really, really fast. And the higher this goes and no bull indicator pops up, it's going to show me that it could be a huge bull trap, or things do move up fast and things shift, and this gets negated by a bull indicator. But right now, this bear indicator is dominating. We're 2 weeks in with it. Even though this is right here, a bar that's kind of just sitting sideways, all it takes is for it to go red and next week to follow and break through this support here of 420, and this could possibly go even lower. I mean, these bear indicators last for several weeks to several days, right? And even a month or two, depending, especially when it pops up on the 1 week. Now, on the 1 day, we did get negated with this bull indicator, but we'll have to see, because sometimes things could get volatile with the bull and bear indicators on the 1 day as well. Now, the last time in the 2020 crash, which I've used it as an example, it actually had a bear indicator that lasted all the way throughout, and this was the fake out, and that's what I was looking for in today's scenario. And if we had a fake out and no bull indicator, that would signify weakness and things could continue lower. Now, today, things are a little bit distorted because, yes, we do have a bull indicator, but it's not strong enough. It didn't do a complete shift. It's actually going back down. So we'll see how strong Amazon is affecting the overall markets. It looks great right now, but we need to know tomorrow. So this is the chart that I've talked about. I used it in yesterday's video, and I stated this is what no one's talking about, and it's more important than these earnings for the broader market and the rest of this month. ADP employment change was terrible, okay? Terrible. Crude oil inventories, terrible. And then today, one of the most important ones, which is the one here with the red impact, is the ISM non-manufacturing index. Missed it by 0.10. So that wasn't as bad, but it was a miss, okay? Super important, and factory orders. Now, those two together have some type of impact to Amazon. So Amazon's looking all great, but for January and December, it wasn't so great. So we'll see how things move into February, and things could start reflecting in March or even this month. We'll see. Tomorrow is what this whole entire article that we were reading and looking at together earlier in the video, talking about NFP report. This is what investors' attentions are focused on tomorrow. Well, that's going to be this information here. And I talked about how impactful this was, the non-farmer payrolls, non-farmer private payrolls, and the unemployment rate, guys. This is key. These are the expectations. We will know tomorrow. This is going to be very important, and we need to watch carefully if this is all a fake out or if there's going to be real strength as we see it going into tomorrow and the next few weeks, because the 1 week, guys, is definitely one that needs to be canceled out. The 1 day got canceled out. That is great, but we need to see, because things are shifting right back down. It didn't go into dark green and green. This would be real strength here. This is kind of choppy. And the 1 week, guys, it is in a situation where it popped up. That does not pop up every day. It does not confirm every day. And things are looking pretty volatile and still under bear indicators that are signifying some type of weakness. The other one too that you can watch, which this does not happen every day, is the monthly. But this is not as accurate because it doesn't pop up as clearly. So the one I focus as far up to is the 1 week. I'm going to be following 42 Vision very closely and seeing what's going on. And as always, guys, thank you guys so much for watching, and let's make some money.